Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of August 12, 2013. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week mortgage rates pretty much ended the week about where they started. Mortgage bonds have been trading in a tight range. If you look at the chart on the screen, you can see we've been in this tight range for about the last 2 weeks. And mortgage bonds pretty much ended Friday where they started Monday a couple of weeks ago. Now within there was a big sell-off, but then we recovered right back with the jobs report. So bonds are trading in this tight range. We are going to recommend floating your Maryland mortgage rate to start the week. We're hoping bonds can break out of this tight trading range and move higher. But the problem has been this falling blue trend line you can see on the screen right now. We've talked about that. If we do not close above that falling blue trend line, that's bad news for mortgage bonds. The outlook is for mortgage bonds to continue to move lower, which makes interest rates move higher. But if we can spike above that blue falling trend line, bonds close above that, that's good news. We could start a summer rally. We could see interest rates move lower. So we'll float to see what happens to start the week. In economic news, last week we saw the weekly initial jobless claims come out on Thursday, and it came out 5,000 more claims at 333,000 claims for the week. And that followed the poor jobs report from the previous Friday, which showed less jobs created than was anticipated. So bad news in the labor market has actually helped mortgage bonds stay stable. And if we can, if the labor market does not improve, that could help us bust above that trend line and see mortgage rates move lower. But if the job market improves, it's going to be bad news, and that means in September that when the Feds meet, they could actually start tapering the bond buying program, which will probably move interest rates higher. So be on the lookout for that. In the housing news, CoreLogic reported its home price index for June 2013. It showed price increase of 11.88% from June 2012 to June 2013. And then if you look at the previous year, June 2011 to June 2012, we had an increase, but only of 3.76%. So you can see we had an increase in 12 for the first time since 06, and now in 13, we've increased again, but it's more than double. So home prices, housing's on a recovery, home prices are moving up. So if you're looking to buy, get under contract now. The longer you wait, the higher the home prices are going to be. Sellers are less likely to negotiate the longer you wait because they're seeing that the housing market's improving, so you don't have to take lowball offers. They don't have to offer all your seller assistance. So get under contract now. Get out there before the housing market improves even more. In the political news, the U.S. Congress is on their yearly August vacation. They get to take the whole month of August off. They're not back till September. When they come back in September, big issue looming. They're going to have the debt ceiling talks again. The U.S. deficit is approaching the debt ceiling again, so Congress is going to have to vote to raise that. There's going to be a whole bunch of mess around that. That could be bad news for the market, so you could see bonds improve on that news. So we'll watch for that. Now, in the local news, the next free Maryland First-Time Homebuyer Seminar is Saturday, August 17th. That's at the Sheraton Baltimore North Hotel, and that's from 10 a.m. to noon. If you'd like to register for that, give us a call in the office at 410-412-3319 or register online, www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.